Welcome back. It's an absolutely flat day for the market, at least for the big indices, initially the Sensex and the Nifty Bank. The mid-cap index still down about 150 odd points. Sampath Reddy, Chief Investment Officer at Bajaj Allianz Life Insurance, is now joining in. Of course, we continue to get technical advice from Ashwini and Mitesh. Sampath, let me get your call in. I mean, as we've gone through this correction, 4-5% correction from the top, what have you been picking up from the market if you've been deploying any additional money?
We've been, relatively cautious in the market at this point of time because, the market has run up quite a lot in the last 1.5 years. And, if you look at earnings growth as such, earnings growth has been relatively, muted, much below the expectations in the last 6 months to 1 year. So overall, because of that, with the significant lag in terms of earnings growth, whereas, markets have, performed very well. And in that context, we've been relatively, cautious in the market, so, we've been still watching for a, better entry points into the market than looking to put in the small correction which is there right now.
Sampath, good afternoon. We've been talking about how mutual fund inflows have been consistent and SIPs are at record highs in mutual funds. What's the trend at the insurance companies at your end? What's been the recent trend? Mutual funds continues to get significant amount of inflows into their equity funds, but whereas if you look at insurance companies as such, we've been selling more of overall as the industry as such, the sales towards the ULIPs have picked up in the last 1 year, but if you look at in terms of net inflows into the insurance industry as such, it will be much below relative to what you are seeing in the mutual fund. I would say with the inflows as well, inflows coming from the new business of the ULIPs as well as the renewal premiums taking together with the outflows which we have been, which is resulting out of the funds the investors which have come in much earlier if one were to look at it on an aggregate basis. I would say insurance industries by and large into inflows into the industry has been neutral, I would say.
Sampath, this entire Infosys episode, I know you wouldn't be at liberty to speak about specific holdings, but just want to get your thoughts on how you've read this. I don't know, do you have exposure to IT? Are you looking for value considering, how this is probably the most unloved part of the market right now?
Yeah, no, we've been relatively, positive on the IT services sectors mainly because of the valuations, across the board. If you look at in the IT services companies, the valuations are very attractive, less than 15 times PE multiple. And I understand the growth has been relatively weaker there. Earnings growth has been muted in the sector as such as for this current financial year. But in the long term, we are very hopeful that the sector will continue to grow around 7 to 10% in terms of earnings growth wise. For given that very good quality return on capital employed and very high cash flows in the sector, we believe that multiples are very attractive. Given that even the overall the other market, broader market where they are trading today, IT services companies are very attractively priced. We've been liking the sectors. We've been invested in the company Infosys as well. So so we've been liking that sector as such. With the especially the price coming down, we would like we would look to add more because as I said, it's been a good company and I'm sure they will be able to resolve this issue very soon. So we're liking the sector and as well as the company in this case.
Okay, Sampath, stay on. I'll come back to you for some more questions. Let's get some more market opinion. Earlier in the day, we spoke with Adrian Mowat, Managing Director and Chief Asian and Emerging Market Strategist at JP Morgan.
Okay, that's Adrian Mowat. Earlier in conversation with him. Right now, there's something happening with all the Future Group stocks, by the way. Take a look at Future Market Networks once again. Last time we spoke about it, it was up 6-7%. Now it's up 15%. Not just Future Market, Future Consumer, which was Ashwini's buy call, is racing away with an 8% up move. Future Enterprises as well as Future Enterprises DVR. Something's happening with the entire clutch of stocks out there. So interesting trading moves taking place. Sampath, what do you like in consumer actually since we're spotting some of these stocks? What sort of consumer staples, discretionary, how are you playing it?
Relatively, I think consumer stocks are doing well, and we're liking the consumer staples. Given that their sustained long-term earnings growth. If you look at it, consumer discretionary, they have had a very good earnings growth in the last 5-6 years. But last 6 months to 1 year, if you look at their earnings growth, have been very, very muted. Whether it is AC makers or refrigerator makers or cables and wire makers, all of these companies are showing a significant deceleration or probably even decline in some cases in terms of earnings growth. In terms of, so that's why we're preferring the consumer staples, because they are their earnings growth and as well as the longevity of the growth is much better, and valuation multiples are much and relatively attractive. If you look at the consumers discretionary stocks, they are also trading like the multiples that are similar to that of the staples. We think that staples companies should trade at a better multiples because of their predictability in terms of earnings growth and much more longevity of the business, and also very high return on capital employed. Because of these reasons, we believe that they deserve to trade at a higher multiples. Having said that, overall broader market itself is trading at a higher PE multiples. That's a real cause of concern. But within the consumer space, we like consumer staples more than the consumer discretionary stocks at this point of time.
Okay, well, the stock that's running from intraday low is DLF. Just pull out the intraday chart. In fact, the entire sector, HDIL as well, has seen a bit of a recovery, but DLF stands out. Ashwin, any closing comment on DLF?
See, real estate stocks have come back from the lows. So again, as long as mid cap remains weak, you will see downside on DLF. The issue remains that while Bank Nifty has come back and Nifty also has recovered from the lows, there isn't great positivity. It's choppiness, and you just need the right global markets to fall again. So I wouldn't be very pleased with this DLF comeback. It could get back towards 155, 160.
Okay, just under 2 minutes to go before the day closes out, and Anuj, how would you describe this? 150 up on the Sensex, some 15 points up on the Nifty?
I guess as Ashwini described, it's almost like a football match where you've had 3 or 4 goals, and in the end it's just a draw. It's a draw. I think both Bulls and Bears both feel that they could end the day happy. The mid-cap side of the market, I think Bears watching, but on the Nifty, I think we have at least defended the 50-day moving average. That's something which the Bulls would like. But let's talk about the stocks that moved in today's trade as far as the Nifty is concerned. Today was a bit of a pharma day, so there were a lot of pharma stocks which moved in trade. Sun Pharma, Dr. Reddy's, Lupin, in fact, all 3 stocks were up 2%. IT also had a good day, ex of Infosys, of course, so Tech Mahindra, Wipro were both higher. BPCL was up 3%, so was IOC, so PSUs also had a decent day. Hindalco also ending at high point of the day, so did Coal India and IndusInd Bank. On the way down, NTPC was down about 3%. Some of the stronger stocks have started to correct. Indiabulls Housing Finance, for example, down 2%, up 81% for the year. Eicher Motors down 2%, up 42% for the year. Hero Motocorp down 2%, up 28% for the year. Ambuja Cement, Asian Paints, Ultratech, all of them up 25% for the year, but down about 0.5% to 1% in today's trade. But real volatility actually today was in the broader market.
Oh, absolutely, Anuj. Actually, the mid-cap index is ending down about 116 odd points, off from the lowest point of the day. But if you look at the profile of stocks that came under pressure today, let's just start by picking up some of these names. So, for instance, we had a Century Textiles falling 3.5%. REC down about 5%. Motherson Sumi falling about 3%. You just get those rates up in a minute. Yeah, those are the stocks I'm talking about. These are not small mid caps that you can, simply brush aside. More names that kind of came under pressure from the financials included Mannapuram, Bharat Financial down about 2 to 3% as well. AB Money's lost about 3.5%. So these were some of the stocks that were under pressure. Most noticeable would be finally Tata Global cooling off, almost a 3% downswing on Tata Global towards the end. That was one set of stocks that was down, and then anywhere where there's confusion, debt issues, promoter issues, that part was still getting sold down today. Case in point would be Religare, which is ending about 10% lower. And then more names on that side. So JP Infra, 5% down, Videocon. Most of your indebted stocks didn't have a great day. GVK, GMR, most of those stocks were struggling throughout the session. The outliers then consumer names, really, they stand out. To start off with, Westlife, a lot of excitement about whether they're going to get the North Delhi, the North India franchise as well. So that was really the stock of the day. And then HCL Infosystems, iPhone, and that really worked well for that counter, 9 to 10% up there as well. We were talking about some of the retail stocks, the Future Group, Future Market, Future Consumer, most of those, Future Enterprises, all of them were up and about. Even Trent was up actually, so was Shoppers Stop now that we're talking retail, but between 2 to 4%. So not too bad on some of those consumer names, but largely speaking, a somber day for the mid-caps, Anuj.
Yeah, somber day. The real mystery stock for me, of course, has been Bharat Financial, and just see the chart of that stock. Every day post 2:30, there's a bit of a move in that stock. On the day up, the street talks about that impending merger buyout. On the way down, you talk about the larger MFI issues, what's happening. So it's really volatile. But anyway, the markets have closed. Let's take final thoughts from our experts. Mitesh, what's your verdict of today's trade?
So as I said, I think, the index-wise, I think not decisive. We need to break 97.50, 97.20, and it'll be tough fast. There's a weekly average, there's a gap last Monday. So I think it might spend a few more days like this in this choppy manner, and the contours will be broadly around 98.50, 98.60 on the upside, give and take 20 points, and 97.20 on the downside. My sense is that eventually I think we'll break on the downside. So I think, it might not happen immediately, but maybe, as we approach the expiry, I think next week sometime could be a time when, after this choppy consolidation ends, we'll break on the downside. So initially, I think, we are still trading with more of short bias.
Okay, Mitesh, thanks a lot for your time today. Ashwini, final question to you as well. The recent low is 96.80. Do you see that holding out in this market? And if it does, would that mean that maybe longs could again enter this market?
Well, if it was such a great support, then today, based on global cues, you should have been a lot higher. It's clear that 9700 is not very strong support, and today we got choppiness. You can't say we had great positivity. So 9700 at some point will break down. So the idea should be each time you go above 9800, look for bears to come in and take short positions. You have to cross 98.50, 98.70 for any sort of extended bullishness.
Okay, all right, Ashwini, thanks for being with us today. Sampath, let's get your final sort of thoughts in as well. Top buying ideas, top conviction, where is it in this market?
I mean, we still like the private sector banks because they are the ones which are growing very well in this weak market. That's that sector which we like quite well, and also we've been liking the metal sector as such. Because if you look at metal companies in India, both in terms of the steel as well as aluminum sectors, companies have expanded their capacities. There are no more capex coming up in any of these companies in this space, and also they've been positioned very well for this recent price move which is happening in terms of international commodity prices. Across the board also we've seen in the last 1.5 years, especially in the base metals, inventories have been coming down. I think that augurs very well for the commodity prices, and our companies are positioned very well with a lot of capex already done, and because of that I think they will be significant beneficiaries of this price rise. So that sector also we've been liking, and also we've been liking IT services sector mainly because of the valuation. So these are the three things, a broader sector where we are relatively overweight in the market.
All right, Sampath, thanks so much for joining in. We'll wrap it up on that note. We have to take a quick break now on Closing Bell, but as we do that, as investors await the annual Jackson Hole Economic Policy